The world is looking at a rapid transformation in the investment ecosystem as we speak. Bitcoin and other digital assets have not only taken the entire financial system by the storm, but also the fact that economies in the world like the USA are now printing money constantly without thinking of the consequences to cover their debts, nourish cash supplies, and invigorate the economy, threatens the global monetary system to come to a screeching halt in the future.
It's finite. It's money. It's a global commodity that's outside of the banking system. And there's no replacement for it.
That is one of the reasons why people, seasoned experts who have been studying and trading in the market for years, are now moving towards safe investments. Investments that are not dependent on the value of fiat for it to be valuable. Assets like gold and silver are the ones that many investors are now leaning towards. They see these two metals as a safer store of value that will have a great future owing to its stability as well as their applications in the industries across the world. The result can already be seen with the increasing demand in every part of the world. In the middle of this, experts like Steve Penny have said that silver will soon hit a price of $300, the highest it has ever been in the history of the world. Some might say that it sounds crazy and almost impossible. Some might think of it as a random sensational claim as a ploy to get a lot of clicks and likes on social media. Some might consider it as a move to seek attention, but Steve will tell you that he knows what he is talking about. He will tell you that $300 silver around the year 2026 would simply be the average amount. And honestly, the suggested $300 of silver would only be a muted replay of its 1970s bull run. It would actually be a little downplayed this time if you ask him. You could even say that it would probably be at 53, when using a 50-to-1 gold to silver ratio. Silver has been a monetary metal for much longer than gold. It is always mentioned before gold. In the history of many old civilizations, the word silver could literally be equated to money if you believe these old records. So it is doubtful that silver is ever going to lose its monetary role.
I like to think that gold is for long-term wealth preservation, but silver would be for transactions, throughout history, because it's a little bit more plentiful. It's about, 9 or 10 times more plentiful in the Earth's crust. So, it's more liquid and more practical for everyday transactions.
However, it could go into a speculative mania much like Bitcoin and cryptocurrency, which would cause a blow-off top, followed by a massive pullback. That's why many like Steve would be scaling up from silver to gold as that ratio compresses. But yeah, no one can deny that parabolic silver carries all of those properties to go massive. What makes it so special? First and foremost, the fact that it is finite. It is a valuable asset, a global commodity that is outside of the banking system. One that there's no replacement of when it comes to its utilities. So, it is just right for a speculative. Maybe there is a very small percentage of the population that just want a little bit of silver, but the supply is limited. Gold is for the long-term wealth preservation, but silver has been for transactions throughout history because it is a little bit more plentiful, about 9 or 10 times more plentiful in the Earth's crust. It is also much more liquid and more practical for everyday transactions. Back when silver fell to about $12 in March of 2003, you could get a physical metal for that price. You would be paying $15 to $16 per ounce of silver, and it was this time when probably things were actually closer to the real ratio, which was at the time just a little bit lower than what we have today. Throughout all of human history, gold and silver always do a full accounting for the expansion of debt-based fiat currency 100% of the time. So it is really just a cycle because of the 7 stages of empire. And part of this final phase here is that the governments just inflate everything away, trying to appease the populace, and then eventually gold does a full accounting for that. So will this time be different? In Steve's words, I highly doubt it. Physical silver is also a physical asset used in industries, which causes supply shortage eventually. And if it continues at the current rate, you will be pitting industry against these banks, which will inevitably result in true price discovery. Back in 1980, you could simply take any nation's currency supply and divide it by the nation's gold holdings. which would end up giving you the current price of gold. And if you did that arithmetic back in 1980, that number came out to 850, which was the exact price that gold picked up. Now, if you did the same thing back in 1933 when they revalued its currency supply divided by the total gold coins, the number would be roughly $35. Now try going back throughout all of history to do that for different countries, different civilizations, and different millennia. One question that pops up is that when countries like China, Russia, Turkey, etc. are either buying a lot of gold or trying to repatriate it from a current location, obviously the price is down. But when it comes to silver, especially with China, because they supposedly have 400 million pounds of uranium reserves as well, even they are buying copper mines all over Africa. But what do they think about silver? Since it's a small market, it really doesn't make much sense for them to put it on their balance sheet, as like no other reserve assets like it does gold. But as a strategic metal that's used in the industry, in this electrification trend, they are going to want to secure as much future supply as possible. And we're already seeing the early signs of that crop up. We saw silver start to rise while gold really had not done much. In fact, in the last year, silver has outperformed gold by almost a factor of 2, as that gold-silver ratio came down from 123 down love to like 65, which is almost half. So we're probably already starting to see that, and where do you think that ratio is at right now? Roughly about 67? But this is not the end. Historically, at bull market peaks, that ratio peaks about 15-1, where it peaked in 1980. That's where it was about in 1933 when they revalued gold. And that's a good historic number to look for, and another number to look for. Silver has pulled out of the ground at that ratio, roughly 8-1. So it's roughly 18 times more plentiful on the ground. So what you need to do is buy silver, fast. Look for about 15-1 gold-silver ratio like Steve does. Look at industrial demand for silver and understand what it means. It is not like you should make silver the primary investment thesis, because you can kind of model out industrial demand for growth, and you can account for that. But what investors in the market can't really account for is that change in psychological shift when all of a sudden a certain small percentage of the population wants to get some sort of a different asset, which would most definitely throw the whole supply and demand equation way out of whack. And that will only be solved by higher prices. So it will go up.
$300 silver, it sounds crazy. And there's a lot of people out there who throw out these crazy sensational claims because it gets a lot of clicks and it gets a lot of attention. And there's really not much backing or logic to, they just make up these numbers. And I really don't like to mention these numbers because I don't want to get lumped in with those folks. But $300 silver around the year 2026 would simply be the average of the previous 2 bull markets.